questions that we wanted to ask was whether, obviously the group around the table this morning are the market leaders on the continent. So are you thinking about how best to manage the pricing for the next renewal? What do you think your customer demands are going to be compared to the last seasons, and how will you manage it? Are you having those conversations? Callisto, what's your view?
I think there will be a pressure on pricing. As we indicate, the international markets, of course, will have restricted capacity. And because of the macroeconomic challenges, a number of enterprises will have challenges in meeting their obligations as in terms of whether insurance is a necessity and whether they would want to get increased prices or to afford insurance. So there will be pressure on pricing, both from the mega players in the reinsurance market and also from the individual. But the situation is still evolving. I know competition currently is cutthroat on pricing, and I see that prevailing towards the better part of the year, because I don't see the situation turning around before maybe even next year. So I would see us trying to get the prices to where they should be, but there will be a challenge to get takers for lower prices or even for higher prices. So pricing will still remain a challenge, and competition on pricing is still expected because of limited potential markets or potential clients. But the bigger issue is the liquidity. As much as we'll be talking about the pricing, the ability of the potential markets to pay has been greatly compromised by COVID-19. And as Lawrence has said, the current biggest challenge we are facing is getting premium payments. And I would see a number of companies struggling on the liquidity part of it. So the extent to which we can leverage technical pricing will be compromised to a large extent by the liquidity in the market.
Mine is, okay, I don't want to say it's just a comment. It's a question that has been in my mind, listening to the various comments from the people here. We have the market leaders for the continent all in this forum. I won't use the word all, but many of them, most of the market leaders are here. I know that until now, your asset side of your balance sheets was usually doing quite well. Our returns on investments in Africa are much better than that in the Western world. And so the pricing that was given on the ground to the cedents on the ground was very often driven by the retrocession rates that were coming to you. This year, for the first time, I feel the asset side is now feeling the pressure. There is now you will all feel the pressure from your shareholders also, because you won't be able to rely on your income from the investment side. So will the continental leaders now, I don't want to use the word continental, sorry, the leaders on this continent of ours, are you going to take control of the pricing in advance and set the tone for the rest of the year yourself without waiting for the world giants to start giving their own message? Or are you going to work in a cohesive manner, maybe to try and come to some agreement of how you're going to make things work? I don't know, I'm not talking about a monopoly situation, but I'm just talking about how the reaction is to be expected, as you will have to take control of your own destinies to a much larger extent than you have been until now.
This pandemic has actually affected a lot of, the industry globally, I should say, because we are talking about our job is basically compensation based, and mostly you see these claims coming in, but you keep on getting mails, postponing, deferring payment of premiums. You get premiums, you invest them, and if this is not coming in, I am just making a comment on maybe not having a lot of claims, but the claims that are coming in, if we are not getting these premium payments from our cedants and from our international markets to pay you the premium, because most of these people in the lockdown, the lockdown countries are not able to pay our premiums as well. So now, what is the way forward? We are not getting the premiums to invest. How do we pay claims as they arise? Because a lot of claims are coming in, premiums are not being paid. I think that's my comment. It's a serious issue, and we are all have to, maybe pray that this pandemic goes out fast so that we can put our economies back, because it's affecting everything, especially the service industry. Most of these people comes on sometimes canceling the business that you've been on for some time, and they are not even paying the premium. So I'm just asking, what is the way forward? Thank you very much.
Yeah, Sangare talked about the CIMA. I just want to come in to share how the market is reacting with the claims of the COVID in the CIMA region. Actually, most of the markets in the CIMA region have rejected the claims caused by COVID-19 by the fact that these claims are force majeure under Article 1 of Book 1 of the CIMA Code on the insurance contract. And the regulators have responded that it cannot be a force majeure or accidental event, and that it's seen as an external, unforeseeable, and irresistible event which prevents the insurer of the obligation from performing their obligations. So this is what's ongoing now in the CIMA. There's a tussle between the insurance companies and the regulators, but the regulators are insisting that they must be paid.
Yeah, just 2 points. I think everybody agrees that the market will suffer from the asset side, from the cash flow side, from the reduction in activities. That's clear. But there is a particularity, I think, in our world. It's on the claim side. Even if we're going to find there and there a few examples of denial of access or a few requests, globally speaking, we are very safe in terms of pure direct insurance claims, because we haven't sold, I don't know, any product which were related to pandemic or epidemic, which is very different in the international world, where you see huge companies having delivered hundreds of thousands of policies covering epidemic in France, in England, in so many countries, where they're going to have massive losses, which they will have to pay because it's covered, as simple as that. I don't think in Africa we have given that type of cover. I don't think in Africa we have a big market of event cancellation, which protects such events. So this brings me to have a look at the entire world. Today, it is said that the loss coming out of COVID will be in the range of $100 billion. So number one, $100 billion would be the largest loss ever sustained by the international reinsurance and insurance market. Now, this 100 billion is probably something like 50 billion in direct insurance losses and 50 billion in assets losses, something like this. Again, 50 billion is higher than Katrina, is higher than 11 of September. So this brings me to the second point. The international market is probably going to suffer something which is the accumulation of a huge insurance loss, 50 billion, and very difficult economical situation, which is probably the scenario where you can face a real turn into the international market, globally speaking. This is what was expecting. Everybody was saying a big loss is not sufficient. You need a big loss and a big economical crisis at the same time to see the market turning and hardening very much. So my second point is to say, we can expect a serious hardening of the international market in the year or 2 years to come, and probably further. And that will impact our retrocession, because this is one of the first places where we are linked with this international phenomena of hardening. So my first point is positive. We don't have many claims, in fact, but of course we are a global world, and we are going to suffer from the hardening of the market in any case, as usual.
Yes, on the question you have asked, it's a very good question, which is about our survival, and we have seen that there are some catastrophic scenarios where our economies will not be able to be, the stimulus from the government will not be able to help the economy. So it will be a long recession. And in my view, the pricing already was under pressure before the COVID-19. So if we take our portfolio, which is published, I think our annual report is going to come out. So it is a reflection of the entire market of Africa in a way, in terms of diversification. You will see that the combined ratio was under pressure. So it is already moving towards 100%. Okay, so and there is no sign of improvement before COVID. So we can say that our financial statement of last year were extremely good because of only one thing: investment. So the investment income we had last year was the best ever in the history of Africa. But in terms of underwriting performance, it was one of the worst ever. So now we are going in a year where there is no investment income. Rather, there will be even a loss. So what are we going to do? I think that we are going to push the rates. And there's no question about that. I think in Africa teams, we know that each treaty, each facultative will be looked at its own merit based on the past.
As reinsurers, I want us to spend a little time of this meeting to look at the impact of pricing for the covers that we are going to look at in a couple of months' time. There are two scenarios. If you have a client whose portfolio is shrouded with claims, has lots of claims, definitely this cedant or insurer will have to bear the brunt of increased prices and possibly even limited market for his or her portfolio. But when you have a situation where the client has a normal portfolio, which is not, besieged with lots of claims, then I think we as reinsurers, we should position ourselves to have a more welcoming and accommodating atmosphere to have these clients and treaties renewed and considered. Because in Africa, what we may lose out is if the big clients, i.e. the European reinsurers, stand their ground that they are increasing prices because of COVID, then for Africa, we should look at an opportunity, a strategy to support ourselves, because if they crank it and they say that they're going to increase prices, COVID has affected everybody. It's not a case where a client has suffered a loss and for that matter will have to suffer the penalty of increased rates and stuff. So I want to probably set a tone that we African reinsurers start thinking about how we will create capacity for our own business, because it is an opportunity for us to grow this business and probably even catch up with our European partners who otherwise will be looking for an opportunity to harden prices, harden the markets for us.
My comment is really was to Corneille's comment on the pressure on rates, that I think we have seen moves by the regulators in Uganda, in Tanzania to implement the minimum rates. And it's an issue which I think as we price the treaties of proceeding companies, encourage them to review rates, because otherwise the sustainability of the industry is seriously under threat. So you find that there's too much competition in most of the Southern African markets, in Zambia, in Mozambique. So it's an issue that as reinsurers, we need to look at this objectively, because definitely the cost of our retro programs next year are going to go up.
We can look on the bright side. I think, yes, I agree that like also my group MD has already mentioned, we've already been seeing pressure on our results. The issue of pricing for our own treaties and all that, I think definitely we have to take measures. I think like for the East African experience, I think we've been trying consistently, I think, just to have these kind of discussions where we see where the industry is going. And it's definitely, it hasn't been good. And COVID really has exposed the weaknesses we had within our markets. And I think one of the positive things that is coming out of this is that some of the insurance companies have used this time to relook at their internal processes, and they are realizing that they really need to do a lot of things right. And one of the things we've noticed, those who have really been digging deep during this period, is to review, for example, the data we get on claims. Most of the cases, I think like AfroAsia, you must have noticed that most of them are digging all through, because we are talking about issues of liquidity, we are talking about issues of liabilities and assets. So they are digging deep to see all the outstandings where they have, and they have been really quite aggressive. And right now, where we didn't have information, it's coming out. And I think by the time we go into renewals, at least I think we'll be having quite a good picture on the exposures that most of the insurance companies, because of internal inefficiencies, they are not even declaring. But right now it's coming out, and it will even give us a chance really to price appropriately. And I think when the numbers are quite there, then it's much easy to. So the biggest weakness is where it's had is that data, the quality of data we get, especially on claims, outstandings, and reservings. And I think this time around, most of the companies, because they are under pressure, also to improve on their liquidity, they are bringing them out. And also it is also giving us an opportunity to those who are not paying their balances, also to make sure that we look at these balances. The issue of outstanding balances is matched with also these internal cleanups that is going on right now. And on the claim side, what we are seeing also is that during this period, anyway, the lockdowns, like for East Africa, I think have been around for 3 months now. And in discussions with most of the insurance companies, the direct market, they say that the claims ratios have been at the lowest ever. So that is the other upside on this COVID. Like even on the health, which is always known for having a very high loss ratios, I think most people are not even going to hospital these days. So in this interim period, you see that kind of the loss ratios really kind of subsidizing. Even the motor is the same because the movements on the roads have reduced. And also the other intervening factor I think that has been there is that most of the businesses are they are financed by banks and other financial institutions. So cancellation of policies hasn't been able to be on a wide scale because the assets are still secured with the financial institutions and they are obliged to keep the insurances. Definitely, on the other hand, there will definitely be premium holidays that which could put a little bit squeeze on the cash flow and the liquidity. But the insurance policies for those who have secured assets are not being cancelled. They are staying in place. Maybe hotels or hospitality industries have been affected. Those which have closed, definitely, they are either asking for silent risk covers, rates, and all this. So, like it's already been said, it's an evolving situation. We are all monitoring as it goes. I think, and also having discussion with most of the direct companies in the region, the impact on their top lines is between between 10 to 5% drops within budgets, not even, but compared to last year, they haven't yet experienced a very big drop. But we know that maybe going into second half of the year, the situation will be quite different. So, but on the renewals, yeah, we have to tighten terms. I think we've been having engagements to see how best as reinsurers we can remain, we can be in a sustainable business. And I think we'll have interesting engagements with AfroAsian when it comes to renewals. I think the one right now going on is for Ethiopia. I think it's the 1st July renewal. So it will be the first test to see how the reinsurance in Africa are going to behave and how they are going to handle the pricing and all that. So that's what I could comment for now.
Just two small comments. And the first is to thank Africa Re for confirming that they will support everybody else on technical pricing. That's a fantastic news. Unless they do it, the rest of the team cannot do it. Secondly, on life insurance, and this is an area where I see a lot of fall coming in, especially since it's the governments which purchases, or the government organizations like the parastatals which purchase a lot of life insurance covers. And we find that in Kenya, at least, there has been a significant slowdown in these purchases. And that is causing some headaches, which we don't know when it will be resolved. It seems that the parastatals are not taking up or renewing the life insurances in time because of lack of funds. So this is an area which is of concern to all of us.
Yes, the comment I wanted to make was following on from the one made by Joseph about the reinsurers in Africa coming together and effectively acting as a buffer to the hardening rates expected from the non-African reinsurers who are probably suffering at the moment. The only comment I want to make on that point is that this is still a supply chain. Even for capacity, unless, and I think there's been perennial discussions on this, unless the reinsurers in Africa substantially increase or boost their capital, you will keep relying on external retrocessioners to give you that off-balance sheet capacity that you need to write the volume of business that you are writing. So maybe that is something to be discussed at a future forum, and probably it requires several discussions. But we are all linked one to the other. And if we want to take or create our own destinies, we have to probably redraw the map a little bit when it comes to capacity building in Africa.